Good evening, this is Robbie Wilson. There's a couple things I'd like to discuss. Number one, I was brought up that if you have to tell somebody who you are, you're probably not. That's why I'm actually a man of few words. But I am going to start with this. At the end of my career, I mentioned I was a managing director of a long-short hedge fund. And what I realized by late '07 was high-frequency trading. To get into my hedge fund, to give you an idea, I would have to go through about 100 plus track records to end up with about 10 good traders. On average, these traders had 15 years experience. They're professional traders. And that way, if I was using 7 to 10, a few didn't do good, I'd pull some off the bench, so to speak. But to give you an idea, a couple of my sub-traders, and these are all ex-floor traders in the CBOE, CME, and whatnot, a number of exchanges. But high-frequency trading did come about a long time ago, and it was in nanos, and that's a thousandths of a second. To give you an idea, two of my guys were trading the S&P 500, E-mini S&P 500 in the futures, up to 150 times a day. Now that's a long time ago, and people think that it just arrived, just as AI. These things have been in process for a long time. What I've been working on since then, as I retired the hedge fund I mentioned, in November of 11, is algorithms done manually and then input. How that works, it's called a flow chart. It actually looks like a Christmas tree. And within that flow chart is what's called decisions. It's a flow chart with a decision tree. Those decisions are buys and sells based on a scoring within our system. Is it a 10? Is it a 7? At the top of the tree, to give you an example, it looks just like a Christmas tree. There's going to be short-term trading. Those trades may last for an hour to 2 or 3, 2 to 5 days a week, and so on and so on. The duration can go out depending on what we're looking at, the sectors that are moving, and what happens to be the hottest sectors. And with diversification, we always move into what's called non-correlative assets. In other words, the S&P 500 has very little to do with wheat. Wheat has very little to do with the NASDAQ, and so on and so forth. So this is done in this program, what's called manual trading. In other words, we're using it manually where we have a mathematical entry, a target, in other words, profit potential, and a stop loss. You never risk $1 to make $1. These are all 3 to 1, up to 10 to 1, depending on the duration of the trade. And again, visit us at remotetradingroom.com, and there'll be more to come. I did want to give a background on algorithms and high frequency and how long ago it really did start.